Assalamualaikum warahmatullahi wabarakatuh. My name is FARRAH binti AZMAN. Today, my friends and I will talk about our group assignment financial ratio analysis. My group members are NURUL, Shazana, Rani, FATIN, ROSLI, and myself. For this assignment, our group got WhiteHorseBhd5M BERHAD as our company. First, we must know what is ratio. Ratios help to put together the three financial statements and to provide comparative statistics across companies and across sectors and industries. Ratios are divided into three: liquidity, leverage, and profitability ratios. Liquidity ratios are used to compare the balance sheet line items and to measure a company's ability to pay its bills in a timely way. However, leverage ratios are used to estimate the comparative quantities of the debt, equity, and assets of the business. Lastly, profitability ratios on the income statement are derived from the revenue and aggregate expense line items and calculate a business ability to produce profit. Before we start our analysis, we must know what is the main activities of WhiteHorse. The main activities of this company is to manufacture high-quality ceramic tiles that provide a wide range of items for every corner of the home. Basically, the main activity of this company is to produce ceramic tiles. Now, we will discuss about the analysis ratio for this company. First, it is liquidity ratios. These ratios are divided into two categories: current ratio and acid test ratio. Current ratio. As we can see from the calculation above, the company current ratio of 2.21 is lower than the industry average of 3.43 times. Hence, it is considered as a bad result since its liquidity position is lower than average. This is because the company might struggle to pay its obligations because it has a smaller proportion of short-term asset value relative to the value of its short-term liabilities. Next, acid test ratio. As we can see, the company's acid test ratio of 0.90 times is lower than industry average of 2.71 times. Moreover, based on the company's acid test ratio of 0.90 times, which lower than 1, it indicates that the company may not be able to fully pay off its current liabilities in the short term without liquidating its inventories, and it has lower liquidation position than average. So that's it. Thank you. I will pass the other ratios to my friends and they will explain about it.
Assalamualaikum and hi. My name is FATIN binti ROSLI. So I will continue with the second ratio analysis, leverage ratio. Leverage ratio is any one of many financial metrics that examines how much capital comes in the form of debt or assess the willingness of business to fulfill its financial obligations. It consists of debt ratio, debt to equity ratio, and time interest earned. First, debt ratio. As shown above, WhiteHorseBhd5M debt ratio is 32.20%, is lower than industry average of 45%. It shows the good result. Next, debt to equity ratio. WhiteHorseBhd5M has a higher debt to equity ratio than the industry average, which is group ratio is 47.49% and industry average is 36.80%. It gives the bad result. The third one is time interest earned. From the calculation, we can see that the company's time interest received by the company is negative 5.53 times, is lower than the industry average of 61.24 times. It also gives the bad result. The third ratio is profitability ratio. Profitability ratio is to demonstrate how well an organization can earn revenue from its operation. It consists of gross profit margin, operating profit margin, net profit margin, return on assets, and return on equity. First, gross profit margin. From the above calculation, we can see that the WhiteHorse gross profit margin of 11.34% is lower than the industry average of 30.6%. It gives the bad result. Second, operating profit margin. The group has lower profitability than industry average, which is group ratio is negative 9.91%, industry average is 0.9%. It also gives the bad result. The third one is net profit margin. From the above calculation, the group has lower profitability than the industry average. Industry average is having a ratio of negative 1.7% as compared to the group of negative 12.14%. It shows the bad result. Fourth, return on assets. From the above calculation, the group has lower profitability than industry average. Industry average is having a ratio of 7.5% as compared to the group of negative 6.76%. It shows the bad result. The last one is return on equity. From the above calculation, the industry average has higher profitability than the group. Industry average is having a ratio of negative 1.2% as compared to the group of negative 9.98%. It also shows the bad result. For profitability ratio, all the ratio is having a bad result. From the SOPL, Statement of Profit or Loss, for the year ended 31st December 2019, Whitehorse incurred net loss of 64,041,000 ringgit. That's all from me. Thank you.
Assalamualaikum. I'm Shazana binti Rani. So next, I will present about the common size ratios for the WhiteHorseBhd5M on non-current assets and non-current liabilities of the group for the year 2019 and 2018. Here is the statement financial position summary for the WhiteHorseBhd5M. So we will compare the common shares ratio for the year 2018 and 2019. How we derive the common shares ratio is by dividing the individual item of non-current assets or non-current liabilities with the total assets or total equity and liabilities and times with 100. Lastly, I will present about the common shares ratio for non-current assets of WhiteHorseBhd5M. The first item is property, plant, equipment. There is a decrease of 4.64% on common size ratio of property, plant, and equipment from 2018 to 2019. The next one is right of use assets. There was no right of use assets in the year 2018, but in year 2019, there is 10.30% of common size ratio. And the third one is prepaid lease payments. There was no prepaid lease payment in year 2019, but in year 2018, there is 1.21% of common size ratio of prepaid lease payments. The next item is trade and other receivables. There is an increase of common size ratio of trade and other receivables of 0.02% from 2018 to 2019. The next one is goodwill. There is also an increase of 0.01% in common size ratio from 2018 to 2019. And the last one is deferred tax assets. There is a declining in common size ratio of deferred tax asset of 0.38% from 2018 to 2019. Next is common size ratio for the non-current liabilities of WhiteHorseBhd5M. The first item is other payables. There's an increase of common size ratio of 0.78% from 2018 to 2019. The next one is long-term borrowings. There's also an increase of 2.57% from 2018 to 2019. And the last one is deferred tax liabilities. This recorded that there's a decrease of 0.35% from 2018 to 2019. In conclusion, based on the business annual report, we can conclude that WhiteHorseBhd5M has met and poor performance for the year 2019. Since the results of the ratios that show positivity are insignificant, thus the company has to take quick action to improve their performance. In order for WhiteHorseBhd5M to improve, the company should focus on how to manage inventory and the liquidity of the assets in the company. Other than that, the company should also improve its financial performance before investors lose interest. Thus, that's all for the financial ratio analysis for the company WhiteHorseBhd5M. Thank you.